Hi, it's Jo and Steve from Freshagenda, and Steve, we're back with another positive GDT event and a bit of a highlight of the surrounding global situation from our latest Global Dairy Directions update.
It's quite a bit, but we'll try to keep it brief. Yeah?
Yes, well, you can.
I can. So to summarise, not much has changed. Back to this map of relationships between commodities in different regions. Really only a small tweak on the hot items that we saw last time. I think everything on the supply side has got tighter.
Yes.
It's probably the main update we had. But also, there's a lot of debate around the world industry about is China's demand weaker, coming back, and it's different schools of thought. We're more bullish than most.
The stock situation, that kind of thing.
And just a story there that came out overnight, which is interesting, put there, that the stocking up thing. So we've been conscious of the fact there's still interruptions. We don't see a lot of that in the media, but there's now quite a lot of interruptions due to COVID outbreaks again. And that supply chain gnarls that have been with us for a year and a half or so aren't going away. When you layer those two together, as we've seen, that builds in quite a bit of tension. And so we think there's an element of that.
Yeah, it's interesting, just the issues with the logistics and the shortages of containers too. If China's worried about that, then every other country should be worried about it, because most of the traffic is to and from China, isn't it?
Across that, between there and LA.
Yes.
And back. US output slowed dramatically. We'll have more about that. And the demand is sort of stuttering.
Yeah.
We've got New Zealand weather, which didn't get better quickly, and still
features later.
Yeah, that features later. Still breaking through the comparatives, I think. And the protein fix remains a strong issue. This month, I think the big thing that we moved on was the fact that we've seen we've known about the feed cost situation in the US for some time. It elevates, I suppose it's cut the margins for producers. A lot of attention's given to this chart we have on the left, which is a income over feed cost margin and the relationship. We think that is largely out the window when it doesn't really take account of the higher cost of feeds, the more concentrates. And look, our friends in the US have been talking about this for some time, realistically, that other things have layered on that when you look at all the other costs impacting the farm sector.
Sure.
We've seen a big swing in the margin. We've just illustrated there, which went out in our October report, how much the dial has moved in the 2 years since October 2019 through to September. So the margins have gone down. That's quite a whack, which you could see what's happened on the bottom right. Cow numbers have plummeted really quickly, one of the fastest dismounts for some time, and that line is difficult to see that pulling up quickly, given where the situation is in the outlook for feed costs. So,
and I guess beef as well.
Well, the high prices of beef, you mean? Yeah, and that's the only little green bar up there that shows through that. There's a little bit of upside there in terms of the culling incentive is pretty strong as well.
It is, yeah.
So it's all going the one way. Europe has got a similar problem, but more amplified across other costs. So data's a little harder to get, but just anecdotally, between where things were 2 years before and compare that to October, there's been a small rise in milk prices. Milk prices are starting to go up more strongly in November. So this is the October situation, but it won't make much of a dent on that margin loss. But their problem broader based, given the hike in energy costs, what that's doing to fertilisers, which are more a problem in Europe than the US. Energy to run a farm through winter and the purchase feed. So all those things elevated to really slash margins from a skinny 2p or 2 cents 2 years ago to down near 13 cents off. So that's a huge change. We've already seen a reduction in cow numbers, and a lot of that is environmental. But when you layer those two together, the hit on margins and the disincentive to feed cows properly or fully, the impact on the big two is very strong. And then when we roll that out, it's hard to see that shifting until we get into the middle of next year.
Sure.
So that's reason for tightness is right there.
Yeah, so and that really is the big change in the month, isn't it, for our latest update?
Yeah. So through to GDT, which was another very positive event.
And not surprising given that context, really.
Yeah. The only thing is some prices didn't go as much as we might have thought. But skim milk powder strong and really coming into line with what's occurring in Europe, which is obviously very tight. The US has also caught up. Fats, another strong performance, but cheddar was the real tearaway.
For whatever it's worth.
But it just shows, European cheddar prices went above 5,000 US dollars in the last couple of weeks. Really big difference between US prices and forward prices in the US.
Yeah, looking really cheap now, but whole milk powder not such a big mover.
Yeah. So there's very strong demand in most commodities this time, except whole milk powder, and come on to that. Here's a little bit more of a comparison of what actually drives those different price changes. And I've just pulled out here 4 events. The most recent, obviously this week's the most recent, and 2 others where there were moderate price rises, just to show what the strength of demand through an event does to the change in prices.
And the blue line there is from back in March, where we had quite a large jump.
Yeah, we had a large jump across the board. Skim wasn't as strong in that one, but there was strong demand in other commodities. Sure. So it's just a change. So the 2 charts are important. The top one is showing what length of the strength of demand over time, and the bottom one puts the price change on the left-hand side rather than the ratio of demand to availability. So it's just the 2 high ones, the orange and the black.
It's that sustained demand over supply, isn't it?
It stays with the event, goes right through. So that's the last event. China wasn't such a strong player. I'll come on to that next. Fats were also strong, but as I said, whole milk powder was a disappointment.
Yeah.
It with futures again outdoing the GDT result, but it's taken that discount from recombined over $400 a tonne.
It's a real bargain.
It is.
Very underpriced. So you would expect it to move.
You'd expect it to move, yeah. So when Chinese buyers have to come back to cover more, and we're getting into that part of the season, it should take off more fully. Again, not shown here, the Middle East did buy, again, a good moderate volume for that region because of that differential.
Sure. They know a bargain when they see it.
Yeah, they're getting one now. So China's buying subdued again.
Yep.
It went back, so after it gave everyone a real glimmer of hope at the last event, it's gone back to where it was. But that strength with China receding on skim milk powder, the strength of that skim milk powder demand across the market, it's a big takeaway.
It's a broad-based demand then, so that is a positive for skim, hey?
Chart of the week, Joe.
Yeah, there's a couple of charts of the week. So we've had a couple of updated climate outlooks from New Zealand and Australia, and obviously Oceania at or approaching the peak of production. Still very wet conditions across producing parts of Australia, so production's still down in Australia. Cow numbers are also a bit down, and we've had some people taking advantage of the very good conditions to actually exit the industry or grow some more beef or do other things. But again, that's an outlook over most of the Australian summer, and it's looking like it's going to continue to be wet, so that La Nina will be with us. And in New Zealand, also wet conditions, and the latest production data was down on the prior year comparative. It looks like it's going to start warming up and drying out a little bit over there, so might get a kick and a bit more of a shoulder into that season, but yeah, still behind. So Oceania ain't going to save us in terms of supply.
No, I think New Zealand's really, it's probably just crossed over. We saw from, blowing up the Fonterra Global Dairy Update charts they put in with that daily production, that problem of reduced collections stayed through to the middle of October.
That's right. So we've got September data, which was down, but October data is probably also going to be negative.
Yeah.
And that's really the peak there.
And it gets interesting if those red discs are meaningful. It gets interesting after Christmas when it starts to get a lot hotter, and will there be enough feed to carry through and have a shoulder?
Yeah.
But there's a good milk price. Mid-range is now up to $8.40. So
and really on currency adjusted terms, the New Zealand price is well ahead of the European and US price, but will it be enough is the question.
Yeah. Great. All right. Well, that's all from us. I hope to see you again soon. We're back in a couple of weeks.